Ciaran Corla, and at the outset I want to thank Deputy Doherty and his colleagues for raising this issue on the floor of the House and affording an opportunity for us all to debate what is undoubtedly a really important issue for many people. And as colleagues will know well, the European Central Bank has an independent mandate to maintain. Yes, I moved the government amendment, please. Has an independent mandate to maintain price stability, and unfortunately for all of us, inflation is still running too high, and the ECB has taken further action to bring it down to the desired target of 2% over the medium term. As colleagues have mentioned a number of times already, the ECB has now increased its official interest rates on 10 occasions since summer of last year, and its main lending rate is now 4.5%. This scale and pace of recent monetary policy tightening is unprecedented in the history of the euro. The level of official interest rates does not have a uniform impact on the interest rates charged on retail mortgage and other credit products. People on trackers and variable rate mortgages have certainly seen their rates go up, on trackers go up entirely, matching the ECB increases, while a substantial number of people on fixed rates have been sheltered from ECB rate rises, at least so far, until their time on that product expires. The Central Bank has indicated that up to half of all mortgage holders at retail banks are likely to have experienced no increase in repayments by the end of this year, and around 40% will be insulated from higher rates by the end of next year. Nevertheless, I and the Government are fully aware that the increase in the level of interest rates, which is unprecedented, allied to the general increase in the cost of living, which people are grappling with, is causing real and genuine difficulties for many mortgage holders. It is essential, therefore, that lenders and servicers step forward and assist their customers who are experiencing difficulty as a result. Since the change in the interest rate cycle, the Central Bank, as independent regulator, has taken action to ensure that firms proactively deal with emerging difficulties for their customers. In my own role as Minister for Finance, I asked my department to establish a long-term mortgage arrears group comprising of officials from the Department of Housing, Justice, Social Protection and my own department. I've asked the Insolvency Service of Ireland, MABS, and the Central Bank to be part of this group. The objective of the group is to examine the full suite of measures in place to reduce the number of people in long-term mortgage arrears and to recommend changes. On the 31st of August, I convened a round-table meeting of the mortgage industry. This was attended by BPFI and the CEOs and senior representatives of all the main mortgage lenders and servicers, including AIB, Bank of Ireland, Permanent TSB, Pepper, Mars Capital, Avant Money, Dilosk and other mortgage entities. Central Bank, the Insolvency Service, the Citizens Information Board and MABS were also in attendance, and they confirmed what we already knew, that from the inquiries coming to them there is an increasing number of borrowers who are encountering difficulty in meeting their mortgage repayments. They also noted cases where borrowers are prioritising their mortgage payments, but that financial difficulties are arising in other areas of their lives as a result of this. And on behalf of the Government, I made it clear that banks and all other mortgage entities should be fully aware of the major challenges that some of their customers are facing. And many mortgage holders have been in direct contact with myself, as they have been with members of the opposition, with my department, with my colleagues in government, sharing their own personal stories. And I know that many are deeply worried about their ability to pay their mortgage now and in the future. I informed the banks and the non-banks of my view that if people are making a genuine effort to pay their mortgage, they should not be allowed to fall into arrears due to the changed interest rate environment. The industry indicated that it is closely monitoring the mortgage situation and it will actively work with their customers to address any repayment challenges that arise, and inevitably they have arisen and will continue to arise for some. They also noted that the level of long-term mortgage arrears is declining, and based on the most recent data published by the Central Bank last Friday, it is the case that the number of mortgage accounts in long-term mortgage arrears is continuing to fall. At the end of last June, 21,400 primary dwelling mortgage accounts were in long-term arrears, which represents a reduction of almost 1,400 in the first half of the year. As recently as the end of 2021, there were almost 27,000 accounts in long-term arrears. Nevertheless, some borrowers are currently under real pressure, and for this reason I called on the industry to demonstrate that they are delivering for their borrowers and that they bring forward new measures to provide further support and certainty for their customers at this time. Arising from that meeting on the 6th of September, the BPFI announced a number of further initiatives by the mortgage industry. As part of that announcement, the second phase of the Dealing with Debt campaign was launched to highlight new and existing supports for mortgage holders. The further initiative was announced by the BPFI for the closer engagement between MABs and credit servicing firms on a streamlined customer engagement framework to accelerate the agreement of sustainable repayment plans for customers in financial difficulty. And this is welcome, and the emphasis has to be on sustainable repayment plans. In relation to switching, all current mortgage lenders, AIB, Bank of Ireland, Permanent TSB, Avant Money, Finance Ireland and ICS Mortgages have agreed initial eligibility criteria to provide clear guidelines for home mortgage customers of credit servicing firms or other non-lending regulated entities who are seeking to switch their mortgage. This is, in my view, a breakthrough and a very welcome development. Separately, Pepper Ireland also launched a new fixed interest rate alternative repayment arrangement option that may be available to assist its customers in significant mortgage difficulty. When applied, this will see the variable interest rate on a customer's mortgage temporarily discounted and fixed at a reduced interest rate for a period of time of up to 2 years. This is a welcome and a badly needed initiative from Pepper, and I hope that other mortgage entities will add this type of arrangement to their suite of alternative repayment arrangements. Borrowers in difficulties need this type of certainty, and I now encourage Pepper to provide further clarity on the rate, but also to clarify on who will qualify and what the eligibility criteria will be for people who are facing distress or who are currently in distress to avail of that 2-year fixed rate as an alternative repayment arrangement. And as Minister, I will be keeping a close eye on the numbers of customers who are in a position to access this new arrangement. All regulated entities, including banks, other regulated mortgage lenders, loan owners and servicers, are required as a matter of law to follow the statutory central bank codes of conduct, including the Code of Conduct on Mortgage Arrears, the CCMA and the Consumer Protection Code. These codes are not voluntary, and there can be no question of the regulated owners not following them. The CCMA in particular provides very important protections for cooperating mortgage borrowers who are experiencing repayment difficulty. A borrower does not need to be in arrears to avail of the CCMA provisions and protections, and I think it's important that we all amplify that point for people who are facing real distress if they are not yet in arrears. The CCMA makes clear that regulated entities, including servicers and loan owners, must treat their borrowers in or facing mortgage arrears with due regard to the fact that each case of mortgage arrears is unique and needs to be considered on its own merits and handled in a sympathetic and a positive manner, with the objective at all times of assisting the borrower to meet his or her mortgage obligations. Last Kieran Corley, these are very challenging times for many mortgage holders. Any decision on this needs to be taken in the context of the overall suite of measures that will be announced on Budget Day, when the Government will set out a comprehensive response to the cost of living pressures that so many people are facing at this time. We have already responded quickly to the cost of living pressures, with over €12 billion of measures already implemented since the beginning of last year, including income tax reductions, cuts in childcare fees, increased social protection payments, energy credits, free school books, cuts in school transport fees, cuts in VAT and excise on energy and fuel bills have all made a real difference to households throughout the country, including people who are paying a mortgage. And I can assure the Dáil that the budget in less than 3 weeks' time will include further cost of living measures. In relation to the bank levy, I want to make it clear that the contribution by each bank to the levy was the same in 2022 as it had been the year previously. It has not been cut. The Government did take the decision to remove both KBC and Ulster Bank from the scope of the levy in order to minimise the potential for disruption in the banking market. any incentive for those two banks to leave the market more quickly than they eventually did would not have been in the interests of customers across the country. I've previously stated publicly and repeat in the House this evening that the bank levy will be extended beyond the end of the current year, and I will outline further details on Budget Day in relation to the amount that the levy will bring in next year and indeed the reach of the levy. I've also strongly encouraged all regulated mortgage firms to engage with the Oireachtas Finance Committee and to outline the various measures they are deploying to assist their customers. I know that the Governor of the Central Bank was before the committee today, but I directly called on all of the non-bank entities who have yet to appear before the committee to do so and to give an account of their actions and to face questioning in the same way that other lenders are doing. For its part, the Government will continue to meet this challenge and ensure that the frameworks are in place to deal with the difficulties in ways which are effective and which are fair for all. And our response to the real cost of living pressures that people are facing around the country will be outlined in less than 3 weeks' time on Budget Day. Thank you very much.